What is up, everybody? Very turbulent day in the markets today. So a lot of things to talk about. So go ahead and get right into it. And if you haven't subscribed to the channel, please like, share, and subscribe to help grow the channel. So first of all, I want to talk about the current market conditions and Bitcoin and what we've been seeing and everything. So it was in the symmetrical triangle. It's in a range, in a greater range, but then it started to make this pattern of a symmetrical triangle. And unfortunately, this was bad price action. That's not what we want to see. When you got this breakout, it's not that it was low in the range. Like I would normally say buy when it's like that, but it's how it went down. It's what it looked like, and I can't share Telegram on StreamYard, but I shared screenshots, and it looked like it was breaking down from this. It didn't look good within the triangle. So I kind of had an idea that's what was going to happen, and then breakout, not good. Just being honest, like this is a terrible candle. And it's not that most people freak out because the price is low. That's not my issue. It's how it went down. And then you see on smaller time frames, this is when I look at smaller time frames to get a better look at the move. Like you see it consolidating right above that trend line, and then a decisive break, and then you even get the follow throughs. Like that's a pretty good sign. These are the reason I'm going over this. These are the things you want to look for when reading price action on what makes it different when was down at the end of the range last time. It's not just arbitrary. It's not just that it was at the bottom of a range, and they're all the same. It's not that at all. And we talked about some areas that could find support. We talked about 200-day EMA and somewhere else that we're going to talk about later in the stream. And that's exactly where it hit. It hit off the 200 EMA. Now, it's so EMAs and trend lines and things like that, they're called dynamic levels of support and resistance. So I don't think this 200-day EMA is really strong enough to like give it support and lift it back up, and get it back going. I mean, maybe. Some good things that are happening now. So like when you look at these candles, like it has a decent wick. You're like, okay, well, what makes the wick far enough, or how do you judge that? Well, professional traders, they look at, is the wick greater than 50% of the candle? And if you look at 50% of the candle, it's like right there at it. It's at the 50% fib line for the candle is like exactly at the bottom of this range too. So it's great that it has went up throughout the after the New York session. And this is pretty much what I thought was going to happen. The New York session was going to open, it was going to dump it. And I was hoping after the New York session was kind of over around 2 o'clock in the afternoon, Eastern Standard Time, that it was slowly just kind of creep its way up. Because what are these day traders doing on this move? They're shorting it. So when the day's over, they're calling it a day, had a good day, whatever. What are they doing? They're closing their shorts out. So then they have to buy it. So that's going to help buy it a little bit. Then you just have other people buying it. You had people buying it off the 200-day EMA. So all these things add up to get it back up here. Now, it doesn't have to close exactly above the 50% line or back in this range. This wick is pretty good. Now, will it keep going down? That's where we'll look at this. And I talked about this on a previous stream before. A CME gap, and you can find this easy. Look at the Bitcoin CME futures chart. And I'm not the biggest CME guy. They don't have to get filled. But the thing was, this symmetrical triangle, this right here, this is the measured move from this symmetrical triangle. So breaks to the downside. That lines up almost exactly with that CME gap. It's not great when you get confluence like that. I could also see it going down, and then before it even gets to the CME gap, finding a lot of support, and then all these people waiting on the CME gap get left out. I've talked about this in previous streams too. That's what happened in 2009. All these CME geniuses, there was a gap at like 9,300, and as Bitcoin was taking off, they were like, no, CME gap's going to get filled, and they got left behind the whole bull market waiting for that CME gap to get filled. So the CME gap certainly does not have to get filled. Go some of the comments. Yeah, we got a lot to talk about. Dino, thanks for tuning in. Definitely got a lot to go over. Probably a pretty lengthy stream. Well, about an hour, maybe more. Danny the Bull, what's up, man? Walls, my right-hand guy. And I appreciate all you guys for sure. Legendary Leads, yo, what's up, man? Oh, Josh Fleck in the house. What's up, brother? Danny and Smells Fun. What's up, bro? So those are some things, on the immediate, what I'm seeing with Bitcoin. I don't think it's going to bounce right up. I don't see a V-shaped reversal. Tomorrow, we want to see, is price, is it going to be accepted here? Is it just going to like trade below the range and act like everything's all good and not make an attempt to get back in here? And that's what you want to see. And you do it on smaller time frames. So especially when it gets up here around this range, you want to go into smaller time frames. Are candles rejecting off this area? Are you getting like on smaller time frames, candles with long wicks on the top or decent wicks on the top, or, getting a decent bull bar followed immediately by a bear bar of equal size? Those are the things that you want to look at to try to read the move better. BTC dominance, hot topic these days, as always. This is great. I've been saying that I think the high is probably in for BTC dominance for the cycle, assuming that we have the same kind of 4-year cycle market structure that we've seen. Then yeah, I think this is the high, and we'll talk about that later in the stream too. And then you get lower high, and then technically another lower high here. It didn't get above that. Now I thought right here that we had a lower high, and then maybe it was going to start forming a channel down. That didn't happen. We got that big candle yesterday, but immediately, bad candle for BTC dominance. So that's good. We don't want it to go up. We don't want it to go up to 70%. I've looked at that theory a lot about BTC dominance has to hit 70%. And I've actually kind of come to the conclusion that the 70% number is irrelevant. And I'll explain that later in the stream. So BTC dominance is fairly bearish still. It can't extend above this general level here of 60 to 62% and trend up above it. So hopefully we'll continue to see that, and BTC dominance will fall. And we're going to look at BTC dominance on a greater scale later in the stream also. So when, I've noticed this in my time in crypto, when market conditions, the more uncertain they get, the more people start looking at other charts, like outside of Bitcoin and crypto. That's when they start talking about lots of macro stuff, lots of macro charts, DXY. You've been hearing M2 money supply a lot. Then it's all about quantitative easing, rate cut. You really seem to only hear these things when the market's in a real uncertain phase, because I think people are trying to dig really hard to find answers that maybe they're not seeing in the Bitcoin chart, or trying to find an edge, or they just want the answer so bad. At the end of the day, Bitcoin doesn't have to do anything. The 4-year cycle does not have to play out, but we're going to look at what is different this time, because there are things different. And all cycles are going to be a little bit different, but we're going to look at it from all these macro indicators that people talk about. We're going to look at it from the standpoint of the dollar, from US interest rates, from quantitative easing, from Bitcoin dominance, M2 money supply, ISM. We're going to look at all those things on how they did on previous cycles. And I have a spreadsheet we're going to look at the end where we put it all together and see what is actually different from this cycle, from previous cycles, when we're looking at all these macro indicators that people seem to be so in love with these days. Generally speaking, I look at the chart I trade the chart I'm looking at. I look at it, the chart I'm trading is what I look at. I don't look at all these other things. I think situationally it's good to look at these things, but we're going to look at all of them right now. So first off, let's start out with M2 money supply, because this is something that you're seeing all over the place now. M2 money supply. Well, the market can only go up if M2 money supply is going up. What is M2 money supply? So it sums up the dollar bills, coins, and deposits held by public and commercial banks and other institutions, as well as their balance in retail, money market funds, and more. So it's it's kind of like how much money is actually out there. All right. So we have a chart for it, a little graph, macro graph. So let's see, it's kind of always going up, but where was it at? We're going to look at Bitcoin cycles, all of the cycles going back to 2013. So the high in Bitcoin, 2013, here. And before we go any further, we'll check this out real quick, so that we know that, just keep me honest, that we know that I'm telling the truth about when these highs were. Okay, so lots of people took the last cycle to 2021. They kind of consider 65 and 69. How they kind of think of it like, I mean, it was a double top, but they kind of look at like both as legitimate times to get out of the market when they were all-time highs from last cycle. But the actual high was later in the year in November. All right, 2017, the high, and this is a weekly chart, so middle of December, and 2013. And another thing I want to come back towards the end of the stream and look at is the sell in May and go away narrative. And let's see how that played out in other cycles. All right, so 2013 all-time high, about the beginning of December. Okay, so all three, it was late in the year post-halving, so throw that out there just to keep in mind. All right, so back to M2 money supply. So we know these markets ran up towards the end of the year, and the highs were at the end of the year. So 2013, so let's say in October, okay, it's going up. It's going up pretty good. 2017, end of the year, once again, pretty good uptrend. Similar, it's pretty much the same as 2013. Now, 2020, look, it went up like parabolic, the most in its history. But see, the reason I point that out, crypto wasn't going parabolic in 2020 at all. March, that's when the spike actually happened. That's when the COVID low was. So that's an example of how it's not directly proportional. Now, the top of the market in 2021, it was on this uptrend, on a steeper uptrend than it was down here. But in all three markets, M2 money supply was going up. And it's rare that it goes down. So this downturn here is one of the first time, it's the first time you see on this chart that it goes down. But I also want to bring up October 2023. That's another day I'm going to talk about throughout the stream. Okay, M2 money supply was going down. You see right after that is when it started to curl up, but it had been going down. All right, so that's when the market kind of got out of the basement. And then people were talking about that was the alt season going into the beginning of 2024. Okay, well, if we need M2 money supply to go up to have an alt season, then how was that the alt season when M2 money supply wasn't going up? And we can also look at like mid-year 2019 for some of these metrics too, because that was a pretty strong bear market rally. And M2 money supply was going up then too, but it's kind of always going up. Now it started going steeper here, around 2010 or whatever. But I do think it matters. But we're going to look at all these things and try to make some sense out of them. So another thing we want to look at is quantitative easing. That's another thing that we keep hearing a lot of, right? That's another thing. It can't go up if there's no quantitative easing. Can't have an alt season. So what is quantitative? How do you know? Like what can you look at? Is there a chart or whatever? And it means when the central bank, like the Federal Reserve, starts buying large quantities of government bonds or other securities in the market, usually when interest rates are already very low or near zero. Now it says usually, and it goes down to here, it talks about, because then it can be used as like another tool to try to stimulate the economy after you draw interest rates down and maybe you're not getting that. So it doesn't have to be, you don't have to have interest rates down to have quantitative easing. So this is the chart of the quantitative easing, how you look at the Federal Reserve balance sheet. So let's look at it in relation to the Bitcoin cycles. Okay, late 2023, it was going up in a fairly steep uptrend for not 2023, 13, fairly steep uptrend. Now 17 later in the year, it's kind of flattened down even towards the end of the year. So okay, so there was no quantitative easing in 2017, and even some tightening towards the like right at the end of the cycle, as the cycle started to make its peak and really go parabolic is when the tightening started to happen. Okay, so then we know, okay, and also I said I talk about 19 sometimes, so 2019 it was going down, and you had a pretty substantial bear market rally. All right, so 2021. All right, you see this big, that's when COVID happened and all these things. So 2021, end of the year, it was going up and fairly steep. Okay. Now, and I'm going to talk about October 23rd. Okay. Or October 2023. Now here, look, it's going down. It was going down a lot. I mean, that's one of the sharpest downtrends you see, but that's when the market kind of got kicked off. And once again, if this was alt season, into 2023, beginning of 2024, well, you had some significant tightening going on. All right. So, once again, one of these things that people say it has to be a certain way. It doesn't have to be a certain way. Nothing has to be a certain way about anything. So another one is DXY, the dollar chart. We're going to look at that. Now, I have some arrows up here already at some key times. Also, the 2022 low from FTX crash. That's another point we can look at on the chart. Okay, so that's what this is. That's when the FTX crash was. The dollar was going down, like big bearish candles, like starting a downtrend. But yet, crypto was really going down during that time, because the theory is the dollar goes up, risk assets go down, and vice versa. Okay, so these are the two highs in 2021. Here you could say the dollar was fairly low, down, coming off a downtrend, somewhat, but then it was uptrending, coming out, having a lot of green candles when you had the high of the market down here. Now, then it did go up, and then crypto did get worse throughout the 2022. But then you see when it was the bear market bottom, DXY was printing big red candles. All right, then let's go into 17 here. So where 17 high was. I mean, you could say, it was down for most of the year in 17, and it was kind of a steady uptrend. So you can say the dollar was pretty much in a downtrend for the 17 market, for pretty much the whole 17 market, that as well. And then for 13, sideways. It was pretty much sideways the whole year, nothing to speak of. So I would say that's fairly neutral on the dollar. All right, so next thing we want to look at is BTC dominance, because this is quite more telling than I thought when we look at these data points. Now, another thing that's different from these cycles, it seems to me that it's making lower highs every cycle. Now, this chart doesn't go back to the 13, so it only started here March of 2014. So it doesn't go back to that cycle. But this was 2017 when the market started to go down, when BTC started to go down. Market was kind of going up. 2017, I've done a lot of looking into it to say, like, when did it really get kicked off? And it's hard to tell. There was less cryptos then. I have the Wayback Machine even up, I believe. And I had put in CoinGecko from that time. Here it is. So one way I looked at it, I looked at the coins that were popular back then and when they went up. And it's kind of sporadic. Like, I think it was Litecoin. It went up pretty parabolic early in the year, but XRP wasn't until later in the year. Same, and so when you look at all these to try to see when did altcoin season really start in 2017, it's a little hard to decipher exactly when it did, but most things did get their highs later in the year. That was interesting. People think Doge came out of nowhere. Dogecoin was ranked number 8, and this is from February 2017 is where this is from. So back to, the BTC dominance chart. Okay, so that's one thing that's different. If you're getting lower highs, and I talked about a few times that there's this theory that BTC dominance has to hit 70% for it to have a alt season, a rally or something like that. Okay, so here it hit 70%, but remember the high of the market, that was like the end of the year. So when you get this downtrend here, it didn't really spark not that much of an alt season. I looked at these alts that I just showed on the Wayback Machine on what they were doing in 2017, and it's a little sporadic all over the place. It's not really uniform. Now, some things we can look at to tell when the alt season happened. Total 3 and others. But if you overlay total 3 and others over the BTC chart on higher time frames like weekly or monthly, I mean, they basically track the same. It's showing that the alts do track with BTC, and that hasn't happened. Well, it's deviating a little bit right now. But anyway, it hit 70%, went down. Now up here, it hit 70%. Why does this even matter? This was a bear market rally or whatever. So it was going up during the rally. I mean, some alts did okay. Chainlink did really good in 2019, but you didn't have an alt season after this. It was very bearish after this. And then you hit it in into 2020. And yeah, that sparked the season. That sparked the run. But if you say the 2017 was pretty much an uptrend for Bitcoin all year long, well, dominance started to go down in March, and it just was a downtrend the entire market cycle. And like I said, Litecoin and some of these had their parabolic gains early in the season here. So I think it's fair to say that the 2017 season started February, March, somewhere around that time, right when BTC dominance started to trend down. Once again, we can't go back to 13, but we go to 2020, 21. Once again, when BTC dominance started to trend down, that's when we got the move. That's when we got the, it sparked the 2021 bull market. Now, and I said I talk about October 2023 a few times because, I hear a lot of people saying that was it. That was the run. That was the blow off, the alt season, whatever. All right, well, dominance was going up for the most part, sideways to up during that time. And one reason I point these things out because alts can still have huge gains and do great with BTC dominance going up, with the dollar going up, with some of these things. And these are the examples of where you see that. So if we get lower highs, because I think that some people who are on the 70% thing, they're saying like this was the high of the market cycle. How can you say that when this isn't like a prominent top, but this was much higher than this, and this is when things started to go up. So I don't really consider this all that relevant right here. Nor do I consider this very relevant where it hit, in the 2019 bear market rally. Why is this relevant? Nothing. What happened after this? Nothing really. So now I think this is relevant here, not that it's 70% so much, but that's when the start of the bull run kicked off. The dominance drop is what kind of sparked that. The same things you see in 17. So in 17 and 21, you see the market start to take off when dominance gets that big drop. So we haven't had that yet. And I considered a lower high between 17 and 21. So this is what you could say it's really the same that we've seen in the past without assigning numbers or trying to calculate how much it should have dropped. You got the 2017, 2021 lower high. In both cases, the market picked up right after you got that high and you started to get a downtrend, and this can be some kind of topping pattern. I've talked about this a lot, tight bear bull channel up, had the breakout below it. And then it's like trying to go, this is like, so if I was seeing this as an asset, I would like, this is his last gasp up. And that's a pretty bearish candle there. And then followed by immediately, outside bar. Well, it's not outside bar, but it is over the body. So it engulfed the body. It's pretty bearish. And if we look locally, which I think we did a little bit already, but this is a bearish candle for today. So could it go up and eclipse this and prove me wrong about this whole 70% thing? Maybe so, but I'm showing my work here, about where I'm getting these things from and these data points. Any thoughts on this? What is this, Walls? And I'll give you my thoughts if you tell me what this is. Is that delaying a quantitative easing a reaction to funds making their way into the market? I don't pretend to be an expert on it. The best thing I could say about quantitative easing is when they try to stimulate the economy. So whatever conditions, there could be a million reasons why they wanted to stimulate the economy. Like you said, when we looked at the Google about quantitative easing, talked about the interest rates are normally low, but they're not always low. And that just gives you an example of how it's generally to stimulate the economy. Bull market signals. You know what? And I meant to bring that up, Walls. Matter of fact, I'm gonna because I had seen that as well. And that is something that we can look is different from this cycle as well. So what that is, I don't know if I find, okay, I'm gonna, excuse me just a second. I'm gonna get that link that he sent if I can grab it real quick. Bear with me just a second, but this is a good data point, or at least I think it is, because we're talking about what is different this time. All right, bull market indicators on CoinGlass. These are traditional top signal indicators that we have seen. Hit or not, X, 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 all the way down on all 30 of them. So if this time is different, then we got a top of the market without a single traditional top signal that we've seen be hit. Not one, not even most of them getting close, like Pi cycle indicator. Some people have said the Coinbase signal hit, and it really didn't. Coinbase was it was the #1 financial trending app for a very short period of time. It wasn't #1 total. And I don't think that's the signal it used to be. There's more ways for people in the States Coinbase was the main fiat on and off ramp for many years, but now Robinhood, crypto.com, Gemini, there's other ones that people use now. So I don't know that that's the signal that it used to be. But thanks for reminding me about that, Walls, because this is a great, if this time is different, if we've seen the top already, then it goes against everything that we have seen before that was somewhat of a top indicator. So something to think about. Now, another macro indicator that I want to look at is called the ISM. So what is the ISM? The ISM Manufacturing Index, also known as the Purchasing Managers Index, PMI, is a monthly indicator of U.S. economic activity based on a survey of purchasing managers at manufacturing firms nationwide. It is considered to be a key indicator of the state of the U.S. economy, formerly called the whatever. So it's like a metric of how U.S. manufacturing is doing. Doesn't sound like it would be like the greatest macro indicator, but a lot of people do believe in it. So two things to look at here. If it's above 50% and if it's trending up. So let's get as close as we can to 50%, which put a line across the chart. There, 49.99. All right, so let's go back. Go back to 2013 and do the same thing that we have been doing. Okay, so 2013, it's above 50. This is May. So earlier in the year, it was going down a little bit. May it bottomed, and it was up for the rest of the year. And as the highs for the market came in, lines up pretty good with this. Look, that's where that peak was. That's where the high was. But then it went down. But then also, when it went back up here, crypto didn't go up later in 2014. But the ISM was going up and above 50 during the 2013 bull run. Now, 2017, it was well above 50, and pretty much I would call this an uptrend. See where it peaked out at the time. So at the time of the high, it was like right here, somewhere around that, you could say. Then in 21, so ISM, it's well above it. I mean, you see, it's like the highest it had been in many years. But then it started to downtrend. It went uptrend the first couple of months in the market, and then it was a downtrend, but still at high levels. So there's November 2021 where the cycle top was. So I would still say that this was up because it's so far above the midline, and it was going up parabolic for the first part of the cycle. And this is where we are now, just crossing over the 50 line, and it's going up pretty good uptrend there. So a pretty good, solid a line up. So that the ISM, I think it's actually a fairly decent indicator. If for all the markets, it was over 50 and in uptrend. So I want to look at a spreadsheet that I made where I put some of these things together. Whoops. Sorry about that. I don't know how it what just happened there. Sorry, bear with me just a second, guys. I had it up, you saw it. Okay. So you see the different macro indicators at the top. And we're going to talk about this cycle. We're going to fill this in ourselves. So M2 money supply, dollar value, BTC dominance, interest rates, ISM, quantitative policy. Then I have the cycle peaks in here. And string pullback, something I wanted to look at if we have time, because I feel that I don't know, that it seems to be a common out here. Everybody's saying that, they want to sell in May or something like that, and that be it. I mean, I would like for that to be the case, but really the things I'm looking at, I think that the cycle top will be later in the year. And why would you think any different? 2013, December of that year. 2017, December of that year. 2021, late November. I mean, pretty repeatable. So why would it make us think that it would not be? And I think the only reason people think that is because last cycle you had the early peak, early in the cycle. That's the only reason why people think that, I think. Now I know they're saying like, well, there's been pullbacks in Bitcoin. So I'm going to get back to this data, but we're going to go look at this because these pullbacks in the springs, it's not as much. It's not what you think, really. Like in here, I put March, June, November, September, because in every one of those months, it was 30 to 40% pullbacks. So was it spring, March? Was it June? And in this one, it was 74% pullback. Then it immediately went right back up. So we'll try to look at that. But anyway, so M2 money supply, we'll look at every cycle. It was rising in all three of them. But also, it's normally always rising. It recently was one of the only time, on the chart we looked at that it was even went down at all. So DXY, 2013 sideways, 2017 it wasn't a downtrend, 2021 sideways to up. Then BTC dominance wasn't there in 2013 for us to be able to tell. And it was sharply down. We looked at that for a minute, sharply down in both those. All right. Interest rates, 2013, it was flat. 2017, rising. 2021, flat. You know what? That's the one we didn't actually look at interest rates. Let's do that real quick. And we'll do this real quick. So 2013, the whole year, you see it's flat, just as flat as it can be down here, the end of the 14. So it was flat for many years over here. Fed didn't do anything. Then 2021, you see it was flat, and they started to go up later in that 2022. So 2021. It was flat pretty much the whole year, right? Yeah, it sure was. It was flat. And 2017, it was up. So it was up. The rates were actually rising in 2017. They were flat in 13 and 21. And I'm sorry that chart didn't share. It had it said it was sharing, but anyway, that's what the interest rate chart said, that it was flat in 2013, flat in 2021, and it was rising in 2017. So that's what we have: flat, rising, flat. All right. ISM, it was rising in all three. Quantitative policy, it was easing in 2013, neutral to sideways to down, if you want to call it that, in 2017, and 2021 it was easing. All right. So if we're going to fill these out for this cycle, M2 money supply, you see it's just starting to curl up. So the common thought process is that it's going to be rising for this cycle. It's not up yet, but that later in the year, especially, and as the year goes on, M2 money supply should be rising. All right, DXY. If we look at DXY, let me stop and try to get back on the charts. If we look at DXY, and this is an interest rate chart real quick, so you can see 13, it was flat, 21, it was flat, and then this was 17, it was going up. All right, so DXY currently looks to have found the top. And if you zoom out, it looked like maybe when it broke above this, it was going to go up here and reach towards that. Looks like it's making a lower high. I mean, these are pretty big weekly candles, high upper wicks, big red bodies there. This is one little green candle immediately engulfed by a bunch of red ones. So I would kind of say DXY looks like it's going to go down. So we'll update that as well. Okay, so DXY, it looks like we can predict this. I mean, these things we don't know for sure, but it looks like DXY is going to be kind of in a downtrend for maybe the rest of the year. And we know Trump wants a weaker dollar. So that I think that's reasonable to think. BTC dominance, similar to DXY, it looks like it may have made a top. If we look at previous cycles, I think it's reasonable to think it's making lower highs on BTC dominance. And when it goes down, that's when the cycle really kicks off. So if it's made this lower high here, and it's not going to go past that 64% or whatever it's went, then I think that we can expect to see BTC dominance go down as well. Interest rates, we know they're going to start dropping rates. We don't know to what extent, but we know they're going to drop rates later this year. They've already said it. Even people say it's bearish with one rate cut. You're at least getting a rate cut. And I think there'll be more than one. I think a lot of people think that. I wouldn't be surprised if he changed his tune next FOMC even. ISM, we looked at that. We said it's over 50 and rising. So once again, I would say that we can't say for sure because we can't see into the future. But with what the charts look like right now, it looks like it's rising. Quantitative policy, kind of like M2 money supply, it's speculated that it's going to be easing during this year, if not right now. Some people say it's already started. Some metrics say that. But I think that it's reasonable to say that we are going to get easing later in the year. Now, why all this is important, if you look at all these things added up right here, if you look at these macro indicators, M2 money supply rising is good. DXY going down is good. BTC dominance going down is good. Interest rates going up, down is good. The ISM going up is good. And the quantitative policy easing is good. If you look at all these three previous cycles, you didn't have all of them lined up in a bullish, like every single one of those was not bullish. You haven't never had that before. All right, well, look what you have in 2025. And like I said, you don't know for sure that these are the things that are going to happen. But from all the best things we can tell right now, All right, M2 money supply, it's bullish if it's rising. DXY, it's bullish if it's going down. BTC dominance, it's bullish if it's going down. Interest rates, it's bullish if they're going down. ISM, it's bullish if it's rising. Quantitative policy, it's bullish if it's easing. This could be the first cycle where you have all these macro indicators lined up, all in the bullish, in a bullish way. And also, when you look at some of these, when people say, oh, it can't go up because of this, it can't go up because of that, you got to have easing, you got to have rate cuts. I mean, you have seen where the market has done what it wanted to do regardless of those things. Also, don't forget, in crypto, we have our own money printer. If USDT and USDC want to start printing, they'll need the government for that. And that's a great bull market indicator as well. So I think it's telling when you put some of these together and look at it like this, that this could be the first cycle that you have all these things lined up in a bullish nature. And you look at the previous cycles, they're all at the end of the year. And then a lot of these things, especially into money supply, rate cuts, ISM, these things, quantitative easing, they're supposed to be later and throughout the year. So I know we want our bags to pump right now, but I think things really point towards more later in the year. And if that was the alt season, into 2023, beginning of 2024, if that was the alt season, if people tell you that's just normal market behavior what was going on then, you could either say it may have been, and this is yet to be seen, if that was the start of the bull market or a late bear market rally. I'm kind of leaning towards that it was a late bear market rally. But in any event, alts had great gains, because people say that, a lot of people saying that was the altcoin season. Well, you had into money supply going down. You had a lot of these things were just bearish across the board. The ISM, interest rates, even BTC dominance going up. So all these things were in a bearish nature at the time, and it was before the halving. So I don't buy into that was the alt season at all. Now, we don't have to have an alt season. That doesn't have to happen. We're not guaranteed that. Anything in these markets is not for sure. All you can do is try and do the best analysis you can to up your probability, and that's really the best that you can do is understand the right things to look at and get the best probability that you can. But just because these things have happened before is not a guarantee. I think everything looks good. I think it's still going to happen regardless of the current market situation or not. Even if we come down to 77 and hit that CME gap, as long as we wick up good off that CME gap, which I think if it goes down there, I think we will. And that's if it even goes down there. Then I think the party's still on. I don't see anything like that. And I don't like how it's breaking below the range now. I talked about earlier in the stream. And I'm not, this isn't hopium. I don't say buy the dip. I'll never say buy the dip. You buy the market structure. If it's at the bottom of the range, that's when you buy. But in this case, because the candles were so bearish going into the bottom of the range, I was like, let's wait. This is the kind of move that could break through the range. Now we'll see if it ends up being a fake break and getting back up, or if maybe it goes down and has to find support at that CME gap, or maybe it can find support before that with people waiting for it or something like that. I don't know that the 200 EMA is enough to hold it, but maybe we can let's look at the daily close. I've been talking, so I haven't even looked at it. So close about 88.5. It's just below the range, probably just below the midpoint in the candle. That's still pretty good. I'd take that, especially earlier in the day. I was hoping to get above 87.5. So to get about 88.5, I'll take that. I think that was okay. So now we look at the Bitcoin index chart and the spring. How does the market react in the spring? So we're gonna go way back on this. So I have a lot of things written up here, and where these blue lines are, vertical lines, that's when a halving occurred. Now the 2013 market cycle. So this is when the halving was in 2013 or late 2012, whatever. Now it started kicking off like shortly after that. Now when it's as I expand the bars, you're gonna see this was actually a big move here. So the halving, and then look at that. That's such a great looking breakout. That's like these little bull bars, no wicks, just one after the other. That is a good sign that things are about to pop off. So you got a nice little run up going into April, 74% drop. Like, can you imagine being in the market back then? Like 74% is pretty big. And then things didn't really get cooking again until October. And we know October is generally a good month for crypto. But look, if you would have thought the market was over then, I mean, look at this gain that it ended up doing. Like, that is monstrous, you know. And we already talked about the high was the end of the year. 17. So the thing with 2017 was you had drops, but you had them constantly. Like, this was the one in March. This was the one in June. See how much that one was. I think this was like 40 something percent from there to there, 38, 39%. So it wasn't even like that bad. I mean, it wasn't good, but in Bitcoin terms. And you had this one in September, you know, so like you had these drops, you know, this one, November, like big drops the whole way up in 2017. So in that regard, I don't think, because this cycle, most people say it mimics 2017 more. If that's the case, then we're like here. But I don't know. We're not going to get drops like this. You know, the market cap is bigger now. You got more bigger players involved. So I don't think we're get moves like that. But, you know, we could, I think getting these ranging periods are just as good as a move down. But in any event, and then we know last cycle, we know that it was a pretty significant drop. And after it hit the first all-time high in April, May, whatever it was, 55% drop. And that's what a lot of people, I think, are kind of banking on for this cycle. So the sell in May and go away, like it has went down in the spring of all those years, but at the same time, like in 13, it's a decisive. Yes, it went down in spring. In 17, I almost don't even count that because you had that the whole market cycle. I mean, yeah, you kind of had it in the spring, but like I said, which do you count? The spring is March or June, or did it happen twice? You know, I just think that you just had that the whole time in 2017, so I don't really count that. And then in 2021, you know, you had a very pronounced, you know, 55% drop and then a double top. What about market breadth? What's that? Is that like a top macro indicator? I'm not familiar with it, or not familiar with it by that name. Short or long here? Well, so this is another thing you can look at. All right, so let's go in here. Let's look at like the hourly. Or no, let's do the daily. It's fine. So I'm quite sure a lot of traders, or some traders, you know, this is how they operate. They'll have a stop order below a level. That's how they'll enter. Like they're not going to enter when they see it. Like they'll have their order set. And it would make sense for them to have it below this candle here. For one, it's below that trend line. And you can say if it breaks below this out of this pattern, then I think it's going below this. And if a trader set that order, this is what they do. All right, right below that, that's where it starts. They're going to put the stop above in this case, they're like, I'll use this weak swing high. Really, the stronger the swing high, the better. But this is weak, but it's also got this trend line. So if I did that and set this, look, that's like almost exactly a 1-to-1 trade. So they may set it as a 2-to-1, but at 1-to-1, they'll take profits. So you had, I think, a lot of people trading this as a potential breakout to the downside, and it hit the target, or at least hit their take profit. And then, like I said earlier in the stream as well, you had some people shorting and taking profit. So right here, I think that the bias is slightly to the downside from like a day trading perspective. If we look at the hourly, and I was looking at this throughout the day, you know, double bottom, higher low, green candles. That was pretty good. You kind of got, maybe you could get a little inverse head and shoulders here. This is dangerous, probably going either way. I think that the bias is probably more down for now. This was a pretty significant move. Normally, it doesn't just V shape back up, but when you do have ones that get sucked back up pretty quick, this is normally what it is when it's like right here at the range, and it'll get back in the range and then just keep doing what it was doing. So not the best time to do either one, in my opinion. But one thing you can do is look at what the better risk reward is. So if you go long here and say you use this, maybe even provide yourself a little bit more protection under the 200-day EMA, and if just going back up to that trend line, that's a 2-to-1. I mean, that looks pretty good. Sometimes if it looks too good to be true, then it might be, but that's not a bad trade right there. Now let's see if we go short, what that looks like. I mean, where's your stop going to be? That's the thing when markets go down fast. And that's the thing also I'm going to say, we start trading under here and it gets comfortable in the 70s and get back up in the 90s quick. We didn't build any price history in the 80s. So when you don't build price history, Bitcoin was in price discovery and it went up through the 80s so fast, it'll go down just as fast, because once it gets in here, what's to stop it? It doesn't have a price history there. But let's look at where maybe you could put a stop if you were shorting it. All right, from current price, I mean, you want to use this, that's a very weak swing high for a stop. But let's just say we use that. Okay, just the 1-to-1, that's going to 83, and that's just for a 1-to-1, not the most attractive. Now, if you do 2-to-1, in a way that almost looks better. I guess like you're getting close to the CME gap, and at least you got some, you're more profit there. I would rather do this than do the 1-to-1, or take profits at 1-to-1 and let it run here. But I mean, that looks okay. But also keep in mind, this is using a weak swing high. If you do it above that, it is almost a 1-to-1. So there's a case for both ways. Normally when there's a case for both ways, neither kind of pan out. And this is looking at an hour. This is at a lower time frame too. So hopefully that helped give you a little bit of guidance, AC. It's not the optimal conditions for either one, in my opinion. When it's so uncertain, like volatile, like it is right now, right, breaking below the range. Now, if it would have, if it would have closed more towards this low and we didn't have this wick, then I would say, yeah, it's probably gonna go down more. That CME gap is probably more likely. But you had a long wick. And once again, I said, I don't think that means like immediate V-shaped reversal up. Because this also could be looked at as a Wyckoff setup where you get like 3 strong pushes down and then they spring up. Now, this did spring some. I don't know if it sprung enough. We'll see on the weekly, because the weekly candle is still pretty bad. Like there's a wick, but that body is still pretty significant. So from that standpoint, that still kind of, I think that you're going to see some sideways to down more. I hope we get back up in the range and go back up, but I think there is some things pointing to down. I don't know if it's enough down to have a successful short play out, and if you want to go against the greater trend. So those are just some things to keep in mind. So if anybody doesn't have any questions, probably wrap things up here shortly. There's probably some other topics I want to talk about or whatever, but we can get them next time. Just in summary, some of my thoughts about it. I think a lot of things are playing out for this cycle, that this cycle could still be massive. I know it's very hard right now, especially most of us in alts. Alts, this is the alt game. if it was easy, everybody would do it. The road to life changing gains like that, it's it's not easy. If it was just buying a bag of alts and holding them, then a lot of people would be crypto millionaires, but they're not. And this is when things will really test you. And I can't say for sure we're going to go up and have the alt season. That's still my bias, and I think I've explained a lot of reasons why that is. And I've looked at things that were different on each cycle and things that were the same. And like I said, all those macro indicators, this is the only one that that all those macro bullish indicators could be lining up for this cycle. Also, you've seen I had some tweets as well saved to go over. I don't really feel like going over them now, but some of it was some ETF data. Sorry, I lost my train of thought thinking about those tweets, because some of them had something about what I was talking about right then. One second, because I actually had some pretty decent ones to go over. Yeah, for instance, like the Grayscale filing to allow staking for their spot ETF. But I'll look at this tweet real quick from Marty Party. I'll talk about him in streams sometimes. He's a good follow. This is kind of what I think as well, because people are like, where do you think we're at? I think we're kind of here. Like I think the best of the bull market has yet to come. Other things that would be different this time, if this time is different and the top has been in, on top of all these other top indicators that we've seen that haven't played out, BTC wouldn't even have a multiple from its previous all-time high. I think it's like 55-60% from its previous all-time high. It'd be the first cycle, it didn't have a multiple of that. It would be the first cycle, it didn't have double-digit gains from its bottom. And double-digit gains wouldn't be that far, or double-digit X's. A 10X, it'd be 150K, a little over that, to have a 10X gain from this cycle. Last cycle was 21X. So I don't think that it's matured enough that 30 or 60% from the previous all-time high and a 6X is what we would get. I think it should get a lot more than that, especially with all these other things lining up. I just don't think it's going to happen right now. But I don't think it has to happen right now either. Nobody likes to see their alts going down. So if it's too much for you, tap out and sell, or do things like don't sell at all. Sell part of your bag when something's breaking a support level and it gets a close below that support level on a higher time frame. The weekly or even the daily can be good enough for that. And then you can buy it back lower or just stay out of the market with that money. If it's that stressful on you, this is not built. Everybody is not built for this, and there's no shame in saying this is just really getting to me, and I'm scared, and I want to put some money aside just in case it happens. I'm dead on the inside. You don't want to be like me. This game has taken a toll on me over the years. Crypto, stock, all that stuff. This is a stressful life if you really want to be in this. So these are just some things to think about. If anybody didn't have any more questions, I'll go ahead and wrap things up. I do think I had some more things to talk about, but it's okay. I can do another stream later in the week. I appreciate everybody for tuning in. If you're interested in my Telegram, just hit me up on Twitter. A lot of things going on in there. Hit me or Danny the Bull up. We'll get you set up. We're still doing 325 for the year. So hit me up if you're interested in that. If not, I'll do a stream later in the week. And I appreciate everybody for tuning in. And I'll catch you guys next time. Later.